What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 29, Thursday, May 18th, 2023. We made a whole lot of trades today, so let's get into it. So let's start our analysis in the pre-market. But actually, before we talk about that, let's talk about our goals for today's session. So coming into this morning, my goal was just simply to execute my trading plan flawlessly. Everything that's in my trading plan, I need to execute. Everything that's not in my trading plan, I need to just let that go. It's not my setup. I don't need to take it. So I just really wanted to come in and focus on getting my trades right, because even though I had a green day yesterday, I left a lot of points on the table by taking trades that were not in my trading plan that of course led to losses. So just wanted to clean that up today. So let's start our analysis in the pre-market where we created this higher low right here. So you know me, whenever I see a higher low get established, I circle it up and then I extend a level of support based off of the lows for the higher low, and I extend that across throughout the session. So this level will come in to play a much important role, not only in the morning session, but also in the afternoon session too. So then we pushed up, created another higher low, which of course I did the same thing, drew my level of support across, and then that brings us to the market open at 9:30. So notice how once we open, we established a consolidation zone where we had multiple retests of that higher low that got established, and we saw that that support level was holding up. So once prices moved higher, created a higher low right here again, they broke out of the zone, created a higher low on top of the zone, which is what I expected to lead to continuation for the uptrend. But where I went wrong on trade number one right here is that I went long just a little bit too early, because if I was thinking about going long, I should have went long on the retest, the touch of the zone, because that right there confirmed that the breakout was kind of okay. Now we see that the breakout ultimately failed, but back at this point, before we saw all of these candles, we would have had a good long entry and been able to take it from about 405 up to about 421, 22, which would have at least let us get 15 to 16 points, or worst case scenario, a break even trade. So me going long right here is just not a good idea, because not only in today's market, but in any market that you trade, going long at higher prices just decreases the probability of your long trade working. It's better to go long from lower prices at a major level of support rather than going long from higher prices. And that's what I learned right there from trade one. So as we see prices continue, they shot all the way back down to the bottom of the zone. Now, for me, one of my favorite setups is the downtrend reversal that has a higher low that gets established. So once I draw my support level based on that higher low that was established, I just like to go long over and over as prices come back into that zone. So that's exactly the thought process that I had at trade number two. So I went long almost exactly on the bottom level of the support for that zone. Now look at what happened when prices came all the way back up to the top. They came back, they barely missed the top. I think the top was at 405. That's where I had my take profit. Guess where they came back up to, y'all? 404. So I was like, dang, man, the market's gonna do me like that on my second trade of the day. But I wasn't tripping though, because if anything, that trade gave me more confidence, because I said, okay, look, I identified the market correctly. My entry was phenomenal. My trade management, phenomenal. The only thing that went wrong was the exit price, and that's because I was just holding out for that last one tick. But it's all good. I know that I'm trading in line with the market, so if prices come back to retest the support level again, I'll go long. So that's exactly what happened on trade number three. So I went long right here based on the same idea from trade number two, but I bought it a little bit too early and a little bit too high. So that goes back to buying from lower prices to set yourself up for success, because I'm a trader that trades with very, very tight stops. So if we zoom in right here, look at where I went long on trade two. That's the ideal entry at the bottom of the zone. But if you look at trade three, I went long maybe 6 or 7 points higher than where I went long at trade two, which is ultimately what led to me getting stopped out at trade three. So if you look at my stop for trade three, that's the orange triangle right here. If I would have went long right here where my stop was, or even if I would have went long at the same price as trade number two, I would have never got stopped out. It would have never even came close to hitting my stop. and I would have been able to catch the move from the bottom of the zone back to the top once again. So that's I pretty much learned my lesson on trade 3, and I was like, look, if I'm gonna play the zone, let me play it the right way. So that's the mindset I had going into 4 as we came back down to retest the zone again. So as we came into support, I went long, took prices back up to the top of the zone, and that for me is my textbook trade right there when it comes to playing the zone, and also when it comes to playing a downtrend reversal that has a higher low that gets established. That's exactly how I want to do it. So for trade 4, I did a good job on that one, followed my trading plan. So after trade 4, we eventually ended up breaking out of the zone, and we came back to retest it, which is a very common market price action principle that you'll see over and over again, no matter what market you trade, no matter what day it happens to be. Anytime you have a breakout, if the breakout is going to be legit, there has to be a retest of the level that prices broke out from, and then you want to see prices continue in the direction of the breakout. So that's exactly what we were able to see up here at point number A. And also notice how not only did we come back to retest the top of the zone, the breakout level, we came back and we made a double top on the breakout level to confirm that the breakout was legit. And that also, that double top, it lined up with the bear trend line that we had going. So that's 3 different setups for me right there. We have a touch of a bear trend line, a breakout to the downside of a zone, and then a successful retest of a zone, also combined with a double top. So it's no reason why I shouldn't have been going short right here, but I had the thought when the market was open and I saw it happening, but I just hesitated, not gonna lie, because I was like, man, what about this higher low right here? Because technically this is a higher low, but this right here is a lower high. So I was so confused. I'm like, man, which one do I go with? Because one of my favorite setups is the higher low established, where I go long based off of the support level. And if you just look at this overall general area, that strategy would have worked. But also the double top strategy would have also worked, because we had the double top. You could call this a lower high marginally, but it counts. And it also came back to test the trend line also. So you could look at that as a lower high. And then this one is where I actually got into it, but I was just a little bit too late to the party, because the first entry, which I've learned a lot of times, is usually the best entry, because that's when everybody is participating. Think about all the people that were in this move right here to the short side that got out down here. Well, more than likely they probably won't hop back in again until they have a clear cut signal. So it's just not as many people participating on the second move as it was on the first one, which just decreases the chances of the second one performing as well as you want it to. So me not going short right here was really just me dropping the ball. I hesitated, and that's one thing that you can't do. You got to be decisive, you got to pick a decision, and you got to rock with it. So I would say what I learned from this junction is that whenever you have 2 conflicting signals, just trade with the signal that happened the most recent. So even though we had a higher low get formed, that higher low was formed before the double top. So because the double top came after the higher low, we got to trade based off of the double top, even though it just seems weird because it's like, oh, it's a higher low right there. I don't know, but if I would have took my setup right there, I would have been A-okay. So yes, I did go short at trade 5, but that came back to break even. I was in profit by like, what, 15, 16 points. So I moved my stop to break even, and to get stopped out right there, break even, it's not a big deal. I pretty much, at that point, I understood the chances of that happening based on the higher low that got established. So after we had the break even trade at 5, we continued moving up. We shot all the way through the zone. We didn't even play around in it. We just went from the bottom straight back to the top, created a higher low right here. So we didn't have to create a level of support to extend it across right here, because we already had the top resistance level of the zone acting as our new support level. So we just use that right there. So then, as you see, prices come back. They did retest that higher low, and then we saw prices move up off of that higher low. So right here, I went long at trade 6, because if we look at candle B, let's draw down to the volume down here. Let's look at that. Notice how candle B has volume that's significantly higher than any of these candles that were formed all the way going back to this candle right here. So notice how the low for candle B actually falls within the range of this previous high volume candle. That's usually what happens when you have high volume candles in the market, because high volume is telling you that within the price range for that candle, it was a lot of business that got done at those levels. So more than likely, if prices are going to come back to those levels, it's going to be more business done once again, because everybody that was already in the trade, they had decisions to make. Everybody that wasn't in the trade but wanted to be, they also have decisions to make. So it's going to be a lot of business and a lot of orders getting placed at that candle. So that's what the volume tells you. It gives you not perfect areas where prices could come back to, but a general area where you could see a pullback come to. So that was my idea on trade 6. So let's read my notes. I went long during the uptrend as prices came back to test the opening price of the high volume candle at B. So whenever prices are trending and I know the trend is clearly established in one direction, which today was to the upside, I look for one of those high volume candles to use as a reference point to maybe look for a great entry into the trend, because even though the trend is clearly defined, you still don't want to go long at higher prices, because we learned what happened on trade 1 and trade 3. So we tried not to make the same decision at trade 6, and I think I did a good job. I waited for prices to come back, retest the open for candle B, and then I took the long trade. Now, I didn't hold trade 6. Now, usually I say that I should hold trades, but in this scenario, I was actually negative, and I was in the red, and this was the first trade that actually put me back at break even. And for me, that's significant. If I can get back to break even, I'll just close out my trades and use that as like a trampoline, I guess, moment where I try and jump from that point and jump back into a profitable day. Because to make back losses and then get a clean slate, it's like you almost get a reset for that day, right? Like, okay, you messed up, but you did what you needed to do to get back right. So from this point forward, how about we make good decisions? So that was my mindset after trade 6. I was like, yeah, I could hold it, but I'm back at break even. I don't want to give that up. So I took a little small trade, a small gain right here, because initially what I thought when I took trade 6 was I thought that prices would come back and hit yesterday's closing price. Now, actually, we didn't even touch on that before we got into the analysis, but let's do that real quick. So that's the only important level on the chart today, and that is this blue line, which represents yesterday's closing price. So that was the closing price from Wednesday, May 17, 2023. And I think it was about 487 or 486, one of those. So the thing about yesterday's closing price is that if you have a trending market that's clearly defined and the closing price from yesterday is not too far away, you can start to use that closing price as a potential target. Because I don't know why people use closing prices, but it's very popular amongst all traders. No matter what strategy you trade, you could trade strategy A, strategy B, strategy C, whatever strategy you use. Everybody looks at the closing price for yesterday in one way or another. It's a very pivotal and important price. So if you get close to it, it's pretty much going to be like a magnet if the trend is strong enough. Don't just go long because prices are close to it. You want to see higher highs and higher lows in a clearly established trend, and then you can use that as a magnet target. So that's the idea I had at trade 6. But when I cut the trade short, I was like, man, I need to find a way to get back in, because I'm not gonna say I knew for sure that it was going up to the closing price, but I'm like, bro, if the trend is already this strong, where else is it going? It's got to go back up and tag that level. So I'm just trying to find a entry, get long somewhere. So once I saw prices spike up after they created this higher low, I took a chance and I bought it at higher prices, because I've seen a lot of times where sometimes when you make a higher low, it'll come back and retest it multiple times, like we did at 2, 3, and 4, right? But then it'll be other occasions where you see what happened like right before B, how we made a higher low right here, and then we immediately moved away from it and we never came back to retest it. That right there tells you that the trend is super strong. So if that's what happened on the higher low that preceded trade 6, I'm like, well, if I wait for a pullback right here, I don't know if I could get it, because if we moved away with no retest before, we'll probably move away with no retest right now. So I just went long at trade 7. I took a chance, but I'm like, look, if we had a big, huge candle to the upside, that's showing us what the buyers want to do. You add in the fact that we're in a clearly defined uptrend and the closing price from yesterday is right here, bruh, we gotta go up. So that was my thinking on trade 7. I took a risk, and I think that's a acceptable risk, because it's a way to be unreasonably risky and it's a way to be responsibly risky. And I think in this scenario, based on what was happening in the market, I made the right decision at this time. But I wouldn't recommend doing that on any other day or any other scenario unless it was a situation just like this one. So that's what I learned right there on trade 7. The closing price is super important. So once we got back up to the closing price, we created a consolidation zone right here where the actual closing price from yesterday acted as a resistance level and the top of the zone. And this is something that's also very, very common in the market when it comes when prices come back up to yesterday's closing price. Because if that level is so important, you got to remember almost like 80 to 70% of people in the market are going to be doing business at this level, trying to position themselves either for what they think will be a breakout to the upside or what they would think would be a breakout to the downside and get rejection from that level. But either way it goes, people are moving, placing orders, having orders get filled. So it's a lot of back and forth right here between the buyers and the sellers, because everybody is trying to figure out, are we breaking above yesterday's close, or are we going to stay below yesterday's closing price and continue moving down? So whenever you have a situation in the market where both the buyers and the sellers are trying to push the market one way, it'll usually lead to a consolidation where it's back and forth, back and forth, back and forth until one of those sides decides which way they really want to push prices and you get a breakout. So I was just trying to play that zone right there, and that's what I did on trade 8. I went long from the bottom of the zone and took it right back up to the top. And yeah, we did see prices continue to move higher, but I felt like I made the right decision on trade 8 because I followed my trading plan perfectly. It was likely that prices would break out and continue to the upside, but I didn't know exactly how long this consolidation zone would last. Who knows that this would have been the last touch before the breakout. Sometimes it'll be a consolidation zone that lasts for maybe 5, 6, or 7 touches of the support line. Right here, we just had 3 of them. So I'm like, yeah, I don't know if it can break out, but I know it could definitely test the top of the zone. So based on the information I had at that time, I think I made the best possible decision I could on trade 8. So those were all of the trades that I took in the morning session. And then I came back in the afternoon about maybe 2 hours later at 12 o'clock, and then I got right back to it. Now, before we even talk about these trades, I want to talk about having a plan before you get into the day. So my plan once I finished was to be done for the day after I made trade 8, because I was up very nicely, had good profits. I'm like, all right, time to walk away. I did my thing today. Let's come back again tomorrow and run it back. I broke my discipline, man. Not gonna lie, because I saw the market moving and I was just like, hey, I saw this consolidation zone that I drew, and I'm like, well, I'm gonna go short at the top of the consolidation zone and just catch a real quick trade back to the bottom. Because if we go back to the morning session, you can't see it because it's like maybe a 30-minute break in between the morning session and the screenshot for the afternoon session, but prices continued up past 550. They came all the way up to like 580, I want to say, and then they sold off hard, which is where we came in right here on this side of the screen at the left. So we came back to yesterday's closing price. We found support right there for a second, but we just made a lower high and then continued down. So to me, in my opinion, at that point, once we broke past yesterday's closing price with lower lows and lower highs, the trend is down in my identification eyes. So I'm thinking that the top of the zone should hold up, right? But that just wasn't the case in this scenario. And I was thinking, like, what could I possibly do to avoid a trade like that? Because this trade followed my trading plan. A consolidation zone was established. You want to trade in the direction that prices were moving before the zone was made. Prices were moving down before the zone was created. So that means I only want to look for short entries at the top of the zone. And that's exactly what I did. Short entry at the top of the zone on trade 9. The only thing I would say that could have been better was, because see, I got to take this trade. I can't say this is a trade that I shouldn't take. It's definitely a trade I got to take. But what I should have been more focused on was my trade management, because when my scalp target is 21 points. So anytime the market moves 10 points in my favor, I move my stop up to break even. Now, if you look at my entry right here, I entered at the top of the wick on this candle. It closed down here. So this was the closing price and this was the opening price for the next candle also. This was more than 10 points away from my stop, but I didn't move my stop up to break even. And that's because, if I'm just going to be honest, man, I placed this trade with a resting order and then I went away to go do something else, which is not something you should do if you're day trading and every tick matters. If you're swing trading, yeah, you can place your order and then you can, let it get hit and let it do what it does, let it work. But when you're day trading, and my trades, most of them on average last about 2 to 3 minutes. So I can't place a trade and then go do something else, because every tick is important. And if I miss one, I could miss a potential move of action that I need to take in the market based on something different that just happened and new information that just came in. So because I was away from the screen, I wasn't able to move my stop up to break even, which would have protected me from taking the full stop loss on trade number 9. So that right there pretty much got me back into it. So if I wasn't quite sure about whether or not I wanted to keep trading right there, well, now I got to keep trading because I got to make that money back, right? So that leads me to trade number 10. I went long right here expecting this higher low to be respected. Now, from a surface level discussion, that seems like a relevant idea and a valid idea. It does on the surface, because you're going long based off of a higher low, right? But market context is also important as well. If we sold off, if in the morning we already broke above the closing price and then had the steep sell-off that we had that brought us back down below yesterday's closing price, it will only make sense that we come back up to retest that level one more time. Because think about it in terms of breakout mode. If we break out past that support level, we should come back to retest it, and then that's when the selling should resume. Now, this is the thoughts that I had after the fact, but in the moment I was thinking, oh, the uptrend is about to continue. Higher low right here, we gotta go long. But I think I should have just been more careful trading around the closing price, because usually if there's going to be any volatility in the market, it's going to come from an area that's very close to the closing price, because you have traders on all time frames making moves when prices get to the closing price from yesterday. Because I'm on a 1 minute chart and I'm making decisions, but you even have people that are all the way up on the daily chart making decisions. People on the 4-hour chart, the hourly chart, the 15, the 5, all time frames are making decisions at this level. It's usually going to be a lot of momentum, so you don't really want to get in the way of that until you can really clearly determine which way the trend is moving. So I think on trade 10, what I learned is just to be careful with yesterday's closing price, because even though that's a good setup for me, maybe I should have reconsidered taking that trade because of the overall context, because the trend was down. Even though we had that big up move from earlier, we reversed that up move and came back down through the closing price. So it's like, okay, you see your best setup, but you don't want to ignore the market environment around it. You want to tie everything in together to get a great understanding of the overall bigger picture. So that's what I learned right there at trade 10. So then after we had that spike, we spiked all the way down. We spiked hard all the way down through the zone, pulled back for a little bit, came all the way back down to the next consolidation zone from earlier in the session that morning. So at trades 11 and 12, I tried to short the low of the swing, but that's just a low probability setup. The same way that you don't want to go long from the swing high prices, you also don't want to go short from the swing low prices, because just like the probabilities of a long trade working at higher prices is lower, The same concept applies when you go short at lower prices near the swing low. The probabilities of your short trade working out are just lower than they would be if you went short from higher prices near a major key level of resistance. So even though that's something that I clearly understand and something I clearly know, sometimes, man, my decisions just get the best of me, and that's what happened on trades 11 and 12. I just shorted way too early, and I made a mistake right there. But where I actually doubled down on that mistake was not getting into the trade once it spiked back through my entry price. Because if I was too early right here on 11 and 12, well, when it starts working as prices break back into the zone and close inside of the zone, you got to take that short trade, because the move that you was expecting is actually working now. So you can't be scared and not take that trade because of the bad trades you had before. You got to treat this trade as an independent event. This trade is a singular trade within your trading session. Trade it the best that you can based on what you see for that trade, and not based on what happened earlier with your other trade. Like, oh, well, I took 2 losses before, I'm scared. Look, if that's your setup, you got to get back in. That's just my job. If I'm not getting back in, I'm not doing my job. So that was the mistake right there from 11 and 12. It was bad enough to short from lower prices, but when it actually started working and I don't get back in, that just makes those losses even worse, because now we can't make it back. But anyway, we move on to trades 13 and 14. I still continued to struggle right here, y'all, man. Look, I shorted again from lower prices at 13, and then came back and doubled down on 14 again. So that's 4 bad trades in a row. And I was super frustrated, as you can tell. And I was just like, what am I doing? Because I was really in my head at this time, because I'm giving back all of the profits that I made from the morning session. I'm starting to get nervous. I'm starting to feel that anxiety start to creep in. Like, what am I doing? What am I doing? I got to get back right. But I was like, look, Ty, you've been here before. Relax. On 11 through 12, you shorted. Your idea was right. Your timing was off. Now you dropped the ball when you weren't able to catch that move when it actually happened. So on 13 through 14, I got it wrong twice again, but when it actually spiked through my prices at trade 15, I took that short trade as we pushed down through the bottom of the zone. So I took that and was able to get a nice scalp target, and I made back these 2 losses that I took on 13 and 14, but I still had to deal with those losses from 11 and 12. So I think I gave back about half of my gains on trades 11 through 14 combined with 9 and 10. Now, actually, as a matter of fact, I think all of those trades combined brought me back to break even. Trade 15 got me back into profitable territory, and then from that point forward, I just stayed there for the rest of the day, thankfully. So let's continue on to trade 16. So look at this spike from trade 15 after it was over. We spiked all the way down, and you can't quite necessarily see it, but let's go back to the morning session and talk about it, because you guys remember how I was telling you that this higher low all the way from the bottom would come back to play a major role later in the afternoon? Well, here's what I was talking about. This wick, if you extend the line from this higher low in the morning session, lined up with that same price level. But actually, you know what? I think I'm lying to y'all, because this price level is at 350 and this one is at 290. So oops, my bad. But anyway, y'all, look, we came back to retest the lows that we made on swing number 15, right? Hold on. All right, y'all, hold on. Let me get it together. All right, look. We pushed down past the swing from trade 15. We came back to retest the zone. Okay, here we go. So just scratch everything I said for the last 1 minute. That was not the touch of that level. But the concept is the same, where you shoot down to a major level of support, which, if we follow it over, was 33,300. Those 100 levels always provide some type of support or resistance depending on the market scenario that you're looking at. So it made sense for us to bounce right there. And then once we bounced from those levels, we created a higher low. So that establishes one of my favorite chart patterns, which is a downtrend reversal that has a higher low that gets established. I draw my level of support based off the lows that was made on the higher low, extend that across throughout the session, and I use that level to go long on. So that was my idea at trade 16 and 17. So I was able to get two nice trades out of that one. But I was a little bit scared to hold it back up to the top of the zone because I saw this swing high that was created at this wick, and I was like, I'm just gonna get out right there because I'm not quite sure if we have enough momentum to get all the way up to the top of the zone because the trend is definitely down. We had a big strong down move. I feel like eventually the sellers will step back in, but I can go long based off of support until I see that actual wave of selling, that next wave of selling come into the market. So that was my idea on 16 and 17. Now, once we broke out of the zone at point C, I saw prices come all the way back down to retest the wick that we made from that previous push to the downside that we made at trade 15. Now, let's go to our trade notes. So I attempted to short based on the resistance at C. And I knew better on this one, man. I really did, because anytime prices break out like this and then they start moving with a lot of momentum back into upper levels of resistance, you don't want to just try and pinpoint where that move is going to stop. You want to see prices come back up and violate whatever resistance levels they will, and then you want to see them break back through those resistance levels, and then that's when I want to take the short. So I don't want to take the short coming up into those prices. I want to take the short as it comes into those prices and then comes back down through on the way back down. So that's where I went wrong on C. And I actually knew that I was taking a bad trade when I did it, but my mindset was, man, you know what? Let me just see what happens. Anytime you have that mind frame, just don't take the trade. You're not gonna miss out on anything. The market is gonna keep moving. It's gonna be plenty more opportunities. If you don't like what you see, or you're not sure, or you just want to see what's gonna happen, either don't take the trade or take it in your demo account where it's not gonna matter, but don't take it for real. So that's what I learned right there. Like, trust and believe in your analysis. If you know something is bad, leave it alone. Don't try and see what's gonna happen. So that was trade 18 right there. I just dropped the ball. I was too early. And then when prices came back down through my price again, I didn't take it. So not only was it bad enough to take the loss on 18, but to not make the losses back when I had the opportunity to was just bad decision making right there on 18 in general. Not only on the entry, but on the exit and the chance to get back in. So we can definitely work on that and clean that up. So then we move on to trade number 19. So I went short as prices moved away from the bear trend line. So if you notice, if you start back up from the top of the zone, we can start our bear trend line right there, connect it with this lower high that got made at 18, and then we can extend that throughout the rest of the market. So as prices came back up to retouch that bear trend line and they started to move away, that's when I went short, expecting prices to come back and just retest these lows that we had down here, because it looked like at one point that we were trying to make this double bottom. So I'm like, well, we'll probably come back and retest that, and that's what I was able to do on trade 19. So I caught a good scalp out of that one. Good trade by me right there, just following my trading plan to the T. And then we come back to trades, my last three trades of the day, trades 20, 21, and 22. So after trade 19, we see prices move up. We created a higher low. So you know what I do? Create my circle around it, drop my level of support across, and extend it throughout the market. And then as prices come back into the level of support, I just look to go long. Now, that's the idea I had, but on 20, I was just way too excited because I knew exactly what I was looking at, and I was like, well, I think that this right here is the touch of the support level, and the uptrend is going to be so strong that the bulls are just going to move away and never come back to that price level. That's what I was thinking, but that right there just represents FOMO, fear of missing out, where you think that the market is going to take off without you. Like, bruh, it's not. It's really not. So you just got to be patient. That's what it comes down to. Be patient enough to let the market come back and get you at the entry that you wanted. You don't have to take what the market is forcing you to have. Like, you don't have to go long right there. You could put your order down here, and if it never gets hit, it just doesn't get hit. Oh well. You didn't make anything, but you didn't lose anything either. So you're still in the same spot, and you can still make good decisions going forward. And you don't have to worry about trying to dig yourself out of a hole from taking a bad trade that maybe you know you shouldn't have, that you should have been patient on, you know? So that's what I learned at trade 20, just way too early, because I'm looking to go long based off of the support level. But look, if I would have just put my entry down here, I would have been good. So that's the thought that I had in that moment, actually, and that's why I went long at 21, because 21, the long entry right here, is actually the same place I got stopped out for trade number 20. So I went long right here, and I was just like, look, this is the higher low. This is the retest of that higher low. So let me go ahead and just get long, because I see which direction the market is moving, and I just want to participate and be able to ride that move up. So on 21, I was able to see prices come back up to the top of the zone, but you know me, I move my stop up to break even once I'm more than 10 points in profit. So eventually they came back to stop me out at break even, but I actually was trailing my stop, so I made 6 points on this trade. So not really a good long trade, but it's better than a break even stop. So hey, that's cool. And then on trade 22, I was like, okay, I see what's going on, because usually whenever I get stopped out for break even, I always make it a priority to reevaluate exactly what's going on in the market and decide whether or not this is a trade that I need to get back into. Most of the time, it's not a trade to get back into if your break even stop gets hit. So I would say 80% of the time, that's the case. But the other 20% of the time, there will be occasions where your break even stop just happened to be the lows for that swing in an uptrend, and it makes sense to get back into the trade and take it to the upside. Because once I saw all of these higher lows get established, I started saying, well, let's also look at the market context, because we had so many opportunities where the market tried to form a bottom. And if you remember from the other day, I think it was Monday, I think that was what, day 26, if I'm not mistaken. I was telling you guys about how sometimes a bottom will not be perfect. There will be multiple tries to create a bottom. So your first try was over here where we had a big, huge sell off, big long tail wick that brought us back up to the upside. We had a higher low, then we came back, we tested that higher low multiple times, and we saw that support level hold up. So that was the market trying to reverse right there, but the sellers were just too strong, and they were able to push the market down for another leg to the downside, where we created what really could be like a double bottom right here, 1 and 2. So they tried to create a double bottom. So that's the second attempt at a bottom formation being formed. But this second attempt, just like the first one, was unsuccessful. Now, yes, sellers were able to continue the downtrend and push prices a little bit lower, but we can't ignore the fact that the buyers have been trying very actively to reverse this downtrend that's going on. So eventually that's gonna happen. So once we had this higher low get established, and then we had another retest that, remember how I told you a stronger retest will just touch that level and move away and never come back? That's exactly what we had right here. Because notice, once we came back and hit that level one time, did we ever come back to it again? Nope. Not until the up move was over, after we already moved up to the zone. But this right here, I wouldn't really count that, even though you could use it, because when it came back, look what it did. Boom, gave you at least 30 to 40 points worth of swing that you could have profited from. But let's stay focused. Once I saw prices move away from here, I'm like, okay, trend is strong. I need to get long. Let me find the best entry price. So that's the reason that I went long at 22 off of that break even trade, because I'm like, look, I see the context of the market. I see it trying to form what could potentially be a bottom, or at least maybe just a minor reversal for maybe 20-30 minutes. So let me try and catch that move that I'm looking at right now, and that's why I went long at 22. So I went long again here with the same idea I had from trade 20, and then my swing target got hit. Usually I hold my trades for a scalp target of 20 points, but on this one I just felt like the zone above was just the clearly obvious level that I needed to go for, because I've seen so many times where you have a level of resistance and then you have higher lows moving up into it. if I'm not mistaken, I want to call it an ascending triangle, but don't quote me on that. I might be wrong. But usually what happens is that that level of resistance gets broken out because it becomes a squeeze where it's higher lows getting made, but prices are stagnant at the top. Eventually prices are just going to squeeze past that level of resistance and keep moving higher. And I know that this trade is lucrative because I've been on the wrong side of this trade so many times that I pretty much had a good idea what was about to happen. You know how many times I've been short right here thinking that, oh, well, we were in the downtrend. These were lower highs, lower highs, lower highs, lower highs. So right here, we should come back and find resistance, and then the downtrend should continue. Man, you know how many times I got that set up wrong? So I finally got to the point where I'm like, look, why don't I just trade it the opposite way? Because clearly that's the way to do it. And that's exactly what I did right here on 22 and took it back up to the top of the zone. And after that, I had to call it a day, man, because I started off really, really well. I did great in the morning session, came back and kind of stunk it up with trades 9 through 15. But after 15, I kind of got back into my groove and got my mind right and just started taking the right setups, taking the setups that I know are the best for me and just rejecting everything else. Aside from trade 18, that's when I just kind of had a lapse in judgment. But outside of that, from trades 15 through 22, I did pretty well and followed my trading plan the way that I wanted to. But so I give myself a pat on the back for that, but I can't get too high on myself because I should have never traded this entire afternoon session in general, period, because once I hit my goal for the day in the morning session, I was supposed to be done. So that means that done is done. It's not, oh, I was halfway done and then I decided to come back. Like, no, man, look, you have a plan, you got to stick to it. And I think that's where the discipline part comes in. I think my discipline is coming along. It's getting much better than what it used to be, but it's still a lot of room for improvement, and that's something I definitely got to work on right there. So discipline, patience, and being confident enough to get rid of all the trades that don't fit my trading plan and only trade the ones that make sense. So I think overall the lesson for today is to have a plan, not only for the trades you want to take, but how you want the session to go and how you plan on trading. What times do you want to trade? How many different sessions throughout the day do you want to participate in? You know, you want to make sure you have all of these things laid out before you come into the session. Because once you get on the chart and you start seeing those prices move, bro, it's harder to make logical and rational decisions. It's not impossible, but it's just harder. So why not make it easier on yourself and already have a plan coming into it, follow it, and be stress free for that entire day. So that's what I want to work on going forward. I think today, I don't know, man. Like, I want to say it was good, but I also want to say it was bad. But the fact that I was able to overcome my bad trades and get back into profitable territory, I think that's something to be proud of because I made the right decisions and I made the right choices. Now, let me work on making the right decisions and right choices after I've already planned on doing that. So I think that's the only thing I got to get right. Just plan it out. I'm happy that I was able to make back those gains, but going forward, how about I decide to live a less stressful trading life and do the right things without doing the wrong things? Because I did the right things today, came back and did the wrong things, and then got it all back right, which is cool. That's nice. But what about those days where you do it right, then come back and do it all wrong, and you can't make back those losses? What about days like that? Those were some of the reasons I had those $900 days last week and the week before last. So I want to make sure that I'm not repeating those same mistakes and doing those same things that led me down the wrong path. My goal is to learn from my mistakes, and that's what I'm focusing on for my trading today. And going into my back testing session, that's exactly what I'll be practicing on. Not only taking my best setups and trading them the proper way, but being patient enough and disciplined enough to follow the plan that I've already laid out for that day and sticking to it no matter what, point blank, period. So I appreciate you guys for sticking with me to the end of the video, man. I hope you guys learned something today. I'll be back tomorrow on Friday, May 19th, 2023 for day 30. So we can run it back at that time. It'll be 9:30 a.m. sharp. You know me. I'll see you good. I'll see you good people at that time. But until then, man, y'all take it easy.